Hello viewers, welcome to our channel. In this video, we will discuss the basics of management accounting, which is one of the branches of accounting. In our previous videos, we have already discussed the basics of financial accounting and cost accounting. Let us look into the definitions of management accounting. One of the definitions is given by the American Accounting Association, which defines management accounting as the application of appropriate techniques and concepts in processing historical and projected economic data of an entity to assist management in establishing plans for reasonable economic objectives and in the making of rational decisions with a view towards achieving these objectives. Let us look into this definition part by part and try and bring out the meaning and essence of management accounting. Now, the management accounting is the application of appropriate techniques and concepts. So, there are certain techniques and concepts which are to be used in management accounting, and these techniques and concepts are used so as to process. Processing here means to bring out relevant information from the historical and projected economic data of an organization. So whatever data is available within the organization. Now this data or this information is usually taken from financial accounting and cost accounting. So management accounting per se is highly dependent on financial accounting and cost accounting for its data. Now, these data are either in the form of historical data. Like, for example, financial accounting is historical in nature. It is a sort of post-mortem. Post-mortem in the sense that the transactions are already incurred and the entries are made in the books of accounts as and when the transactions happen. As such, it is historical. And again, management accounting also looks into the projected data that is available. Now, when we say projected data, now this data can come from cost accounting as well. Okay. To continue with the definition, in processing historical and projected economic data of an organization. What is the reason behind processing it? So as to assist management in establishing plans for reasonable economic objectives and in making of rational decisions with a view towards achieving these objectives. So whatever objectives the business has, in order to achieve those objectives, this historical and projected data will be processed and made available to the management. So this data is not just for strategic planning, but also to take reasonable or rational decisions with a view towards achieving the economic objectives that are set for the organization. From this definition, one thing is very clear that management accounting is exclusively for internal use only. It is used by the top level management so that they can take timely and strategic decisions. Another definition of management accounting is given by Chartered Institute of Management Accountants, London. According to them, management accounting is an integral part of management concerned with identifying, presenting, and interpreting information which is used for formulating strategy, planning and controlling activities, decision making, optimizing the use of resources, disclosure to shareholders and others external to the entity, disclosures to employees, and safeguarding the assets. So, as I already told you, if you look into this particular definition, it definitely brings about the essence of management accounting in the sense that it is exclusively for the top level management to take decisions. Okay, as such, management accounting is an integral part of management. Okay, now here, management accounting identifies, presents, and interprets the information. As I told you, this particular information is derived from financial accounting records and cost accounting records. So whatever information that is required or whatever data that is required by management accounting is taken from the financial accounting and cost accounting data. And what is the use of identifying, presenting, and interpreting the information so as to help the management in formulating strategy, planning and controlling. So formulating strategy means it is forward looking, planning and controlling the activities. So it looks into the past data and helps in planning for the future. And in case if there is any deviations, management accounting also helps in controlling the activities. We already discussed about decision taking. The management accounting data will be used for decision making as well. It also takes into account the ways in which the resources of the organization can be optimally used with lesser wastage and getting the maximum out of it. It also helps in disclosure to shareholders and others external to the entity. It's not just for the managers to take top level strategic decisions, but it also helps the shareholders and others who are other stakeholders. External to the entity means we are looking into the external stakeholders. And then let me make a certain thing clear over here. It is not mandatory for the business to maintain management accounting records. Okay, and as such, there is no proper formats, unlike financial accounting and cost accounting data. There is no formats in which management accounting needs to be prepared. It differs from organization to organization. Another thing is, since it is used specifically by the top level management, management accounting is also called as decision accounting. Okay, it also helps in disclosing the information to employees if needed, and like financial accounting, it also takes care of the assets of the organization. So this is in just the meaning of management accounting. Let me go ahead and give you all a glimpse of the different tools of management accounting so that you understand that all these tools exclusively are from decision making perspective. Okay, it can either be for planning or it can be for controlling, taking decisions, for optimizing the resources of the organization, for disclosure to shareholders or other external stakeholders, to disclosure to employees if needed, and for safeguarding the assets. Anyways, let me tell you, we are not going to deal in detail with these tools. These tools that has been put up over in the next slides are specifically used by the organizations these days and the more popular ones. So we have budgeting tools. Now the budgeting tools includes rolling forecast, activity based budgeting, incremental budgeting, zero based budgeting, cash budget, flexible budgeting, priority based budgeting. The other set of management accounting tools are costing tools. Now, the costing tools are variance analysis, standard costing, throughput accounting, marginal accounting, quality costing, activity based costing, Kaizen costing, and target costing. Management accounting tools also includes profitability analysis tools such as break-even or cost volume profit analysis, economic value to customer analysis, customer profitability analysis, and product or service profitability analysis. Another set of management tools is in relation to investment decision making, which includes CAPM or beta analysis, sensitivity analysis, and capital budgeting techniques like net present value, internal rate of return, accounting rate of return, discounted payback period, and also post completion audits. Performance measurement tools of management accounting also includes economic value added, return on capital employed, cash flow return on investment, residual income, and profit before tax. Along with performance measurement tools, we also have performance management tools, which includes balanced scorecard, business process re-engineering, activity-based management, total performance scorecard, Six Sigma, value mapping, and value-based management. The strategic tools of management accounting include strategy mapping, environmental impact assessment, environmental management accounting, value chain analysis, SWOT, strength, weaknesses, opportunities, and threats, or SWOC, strength, weaknesses, opportunity, and challenge analysis, Boston Matrix, and competitor analysis. And some of the other tools includes value chain analysis, total quality management, and decision tree analysis. Again, all these are just an indicative list. There are lots of other tools in management accounting which I have not put up over here. Only the ones which are usually or popularly used by the business organizations is what I have listed out over here. Let us have a quick glance on the management accounting techniques. So the techniques of management accounting are, we have the financial planning techniques, we have financial statement analysis, decision making, control techniques, statistical and graphical techniques, and reporting. Of all these techniques, maybe some of the techniques we will look into in detail in our coming videos. Maybe we will take up financial statement analysis, we will take up financial planning as well. Some of the control techniques, decision making techniques, statistical and graphical techniques, and the reporting techniques. So that's all for now, viewers. Hope you all had a pleasant learning experience. See you all in our next video.